Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Corn, wheat, and soybean have largely been quiet over the past week ahead of the WASDE report that is scheduled for release today. As we can see, and we'll notice in most of the charts, prices are essentially where they were last week, even following a nice little drop in the prices on the following day on Thursday. The markets have since recovered, and essentially we are where we were last week. We can see here in the December corn contract that we are up against a key resistance once again near the 347.5 number in early trading. And similar to the pattern that we saw back in mid-September, perhaps what we're looking to occur right now is a similar drop with a nice little move back up again before the market moves back down, going into the balance of the month, depending on what we see from the WASDE report today. As we can see, the market's made a nice little top here, and we're looking for a potential move that finds resistance somewhere in the neighborhood of 350 to 353 or so. And so we'll kind of monitor to see how the markets move up against this key resistance area here. But we'll also notice that we have volatility-based resistance setting up against here. So the market's getting up much higher than 360 is most likely improbable. Today we're up against a potential timeline for a market turn. So we can see the market has now moved up into this timeline. But over the next day or two, or perhaps going into Friday, what we might see is the market continue a little bit higher before turning back down, if in fact that is the direction it looks to go in. 2 standard deviations below the point of control is at 327.5. And we can see we've had very good support when the market has come up against this area here. Right now, we're looking at potential support overhead, sitting at about 337 or so. And just overhead resistance, we're sitting at resistance at about 355. So that 353 to 355 area continues to look like a potential nice target zone where the market may fail before heading back down. We have a similar formation here with the March corn contract. We can see here with the stochastic, the pattern that we saw here is potentially materializing once again, which would be an indication of prices moving up to resistance, perhaps near 362.5, and possibly as high as about 370 or so. So in essence, we're looking at a very similar price pattern in its makeup right now, with volatility-based resistance giving us good resistance in the neighborhood of 363 to 370. Our timeline projection for the March contract is similar to that of the December contract coming in tomorrow. So again, we're looking at the next couple days, perhaps on Friday, being a nice terminal spot for this market to make its move, especially if it were to move up against this trend line that we see here for potential resistance. Keep in mind, we also have the point of control level of 367.5 overhead. This too should pose very good resistance for this contract, which is consistent with what we've seen with both this and the December contract. Several weeks ago, we warned that the soybean contract would be entering a slow, low volatility period for its trading, and in essence, that's exactly what we've gotten. The market here was very sideways over the past month and a half or so, and has become even more tight in its movement over the last 30 days. So as we can see in this market, everything's been very tight. We've been oscillating around our key level here at about 358 3/4, and not much has happened in either direction. The top and bottom end of the range that we've seen has essentially seen a low near 937 and a high near 989. Once the market's able to break through either side of these key support or resistance zones, we anticipate seeing a bit of follow through, but until then, we continue to look for a sideways movement in this market. Bear in mind, depending on what we see from the WASDE report, we may see a nice little bump up into resistance, which could make for a final high if it were to occur over the next couple days, with one final drive going into the end of the month before we can recover. If the market's able to actually find strength here, and continue higher, then the low for this contract may in fact be in, and then we'll simply see the markets continue to move slightly up to sideways going forward before coming off the board. Here we see the point of control sits at 960.5. Now 960.5 has essentially been operating as a very nice nodal point for this market. You'll notice that each time he has moved around this area, the same distance that he has moved above, he's come back and has reached the same distance on the other side and continues to do so over and over again. Here we have the market starting to tighten in terms of a small volatility consolidation, but as you can see, what it does below the range is what it has been doing above the range. Until we're able to really break free from this nodal area or this point of control zone, we're not going to really be able to see the market really follow through with a good trend. Much of the same for the January beans contract. But of keynote, you'll notice how the market has really respected our Sinusodal natural wave trend line. You'll notice as the market touches it here, it finds support, comes up to the mid zone, finds resistance, comes back down, finds support, back up again, resistance, and then recently he's been really tagging up against it and finding very good support here. The next move to the upside, we anticipate finding good resistance up against the $10 mark, if it is even able to make it up to that area. Upon reaching here, we can also see that it coincides with volatility-based resistance. This should be a very difficult area for this market, and we believe that if we're able to make a push this week up to about $10 over the next day or two, or even early next week, that should be very good resistance where the market should come down, make its final low before trending back up again. That remains to be seen, but that's the pattern that we're looking for at this time. The market pivot timeline indicated on this chart is on October 17, which is on Monday. So what that tells us is we have the propensity to perhaps move up over the next 2 days, depending on what we get again from the WASDE report, whether we move up into the report or down from the report. The 17th could very well be a pivotal time for this soybean contract. After making a low on August 31st, we'll notice here that the December week contract has been very consistent in its sideways movement from that point. It is yet to break above the 411.5 number and has found very good support at 388.25. Until he's able to break through this area, that's going to be very key for him in determining trend. The key right now is to determine whether or not this movement that we've had is accumulation or distribution. In all likelihood, we're looking for the market to perhaps make a move up if it can find some strength above 413. We're looking to see if this market's able to maintain its strength and move up into mid-November based off of cycles. We do have a caveat though. We have the market moving up to being overbought, which would indicate potential weakness. So one more leg up into being overbought and then with another leg down might be what we're looking at before we can really see an advance into mid-November. It remains to be seen still, and the market has been very consistent in its sideways movement. And until it really gives us a clear indication of trend, we're not necessarily looking to jump the gun as yet. For the December crude oil contract, last week we briefly discussed how markets like to replicate themselves inside of their movements. We can see from this previous low that the market moved up 13 bars, had a range of $8.92, and we suggested that coming down from this most recent low in mid-September, that we might see the market perhaps top about 13 bars in at a timeline of about October 7th. Well, we're 1 day beyond that, where the market made a very big move on the 10th or on Monday. And today, over the last 2 days, Tuesday and Wednesday, we can see the market has since started to decline. And so we can see the consistency of the markets wanting to replicate moves inside of itself. So either we're looking for it to make a range right up to about 892, or we're looking for it to move about 13 bars. Plus or minus a bar is very small, in the grand scheme of things. And so we would really consider that a validated move. We'll continue to see if he's able to break the low from Monday, but really being able to see the move here, had a person been long the market, and we now have an opportunity to have put ourselves in a position to start trailing a stop in anticipation of a pullback to make sure that we're capturing as much of the gains as possible. Now, as this market makes its move down, if it is truly a correction, we'd be looking for potential support to come in no lower than 47.5. If it's able to hold about 47.5 to 47.60, we still believe that the market has a good opportunity to make its way back up to test or to try its way up to about $60 down the road. Thank you so much for joining us for our weekly market update. We look forward to touching base with you again next week.